Let's go across to JSPL now. Strong set of numbers is what they have delivered, but let's go and find the outlook. Most of the metal companies have been declaring good numbers. Mr. VR Sharma of JSPL is now with us. Sir, talk us through your results. Exports have come down as a percentage of volume. Going forward, how do you see the mix changing?
We did very well in Q2 as well as in Q1. And if you see overall in H1, we could reach to a level of about 3.5 million ton production. So overall growth in our production is 11.4% on year-on-year basis when we compare the last H1 versus the H1 of 21. The point number two, the growth is phenomenal, I would say, and now the exports are coming down. Reason being because the domestic market has picked up, and domestic market is, I would say, it is excellent. We could maintain a EBITDA of EBITDA in five figures, and it is 12,500 rupees per ton, as against of 11,700 rupees per ton in the Q1. So as a whole, I would say that the India growth story is working now.
Okay, and what is the outlook then when it comes to your domestic demand? Are we seeing, a resumption to the pre-COVID levels, given that pricing as well seems to be improving, or is it mainly the absence of the secondary players or the demand surge? What would you attribute it to?
And the domestic demand has picked up in all the sectors across engineering sector, automobile sector, construction sector, then shipbuilding, cryogenic tank building, all these sectors, the demand has picked up. So plates, hot rolled coils, pipelines, there is a major economy driver now. So point number two, this demand is sustainable or not? Yes, this demand is very much sustainable, and we feel that a country will definitely consume more and more steel in Q3 and Q4. Point number three, the maintaining the price levels or maintaining the EBITDA. Yes, prices are going through the roof. Today, the hot rolled coil prices are more than 40,000 rupees a ton. Plates are also more than 40,000 rupees a ton. TMT rebar is about 38,000 rupees per ton. And these are the prices which I'm telling you, the ex-factory or ex-gate prices. Over and above, the freight is additional. So these are very good prices in terms of maintaining the volumes and maintaining the sales turnover. Now, this definitely it is a reflection of overall demand pickup. It is not only because of that the secondary sector is not working, because the secondary sector primarily is for the construction steel like TMT, rebars or wire rods, whereas the demand signals and demand wave is coming from hot rolled coils, plates, rails, angle iron, channels, structures. The demand from construction sector for TMT rebars, it is still less. So it is not because of that the secondary mills are unable to produce. That's why the demand is more. No, it is not that. The demand is come up from all the sectors.
Sharma, you've taken charge of the power business. What was it related to? Any recurrence expected? And the PLF trends, what is that going forward? What is the outlook in the power business?
Power is an area which is under stress still, but we could maintain a positive EBITDA. We can also maintain 31% of gross margin in power, but the PLF is still less than 40%, and we are expecting that in the Q3 the PLF should go about 70-75%. Reason being, apart from our regular customers like Kerala and Tamil Nadu, now we are selling a lot to J&K, Punjab, Haryana, and also through the I-Exchange. So I'm sure that through the energy exchange, whatever deals we are doing, and we are getting a reasonably good price, that is 3 rupees plus. And recently we are done with Jammu and Kashmir at 3 rupees 28 paisa, and so is with Punjab. So I think in Q3 the situation should be much better, and PLF should be more than 70%.
Can you talk about the ongoing coal block auction? What's the bidding? What are you interested in? Synergies expected because of that?
There are two aspects. One is coal for coal gasification, and the other is coal for power plants. So, coal gasification plant we have in Angul. So, we produce coal to gas and gas to DRI. This is the first time in the world that any company has produced DRI through coal gasification route. And Indian Swadeshi coal can be used to produce syngas, that is called synthesis gas. And from synthesis gas, we are producing DRI. And now we are buying coal from Coal India or Mahanadi Coalfield. So this particular buying today is at a price which is higher than the price what it could be from our own mines. So it will definitely increase the margins if we get a coal mine. Now the issue is coal mines where? So our interest is that if the coal mines are available within the vicinity of the plant, say about 30, 40 kilometers maximum, then only these mines are viable. Otherwise, transportation cost will be very high. We have 7 mines in and around Angul. So all these mines are owned by NCL and Coal India. Otherwise, we'll be happy buying from Coal India and NCL because freight will definitely imbalance the cost. So this is what we are thinking. The another point is how to get coal mines for power business. So overall power business, we have major power businesses in Raigad. So sorry, this is in Tamil Nadu, district Raigad. And there we need about 45,000 tons of coal every day. If we can get coal mines near to our power plant, nothing like that. Otherwise, we are buying from Coal India, we'll continue buying from Coal India.
Give us clarity on Sarda. How will you, are you allowed to transport? You prepared for iron ore after the restrictions, if any?
This Sarda mines named as SMPL. So the SMPL, they were given a notice by government of Odisha that there are a certain stock lots configuration which are to be adhered as per them, but not adhered to by SMPL. This is what the charge on them. The second charge on them is that you are transporting iron ore by trucks, whereas you are allowed to transport only by conveyor. So this is what these 2 points they told us, the SMPL team told us, and to the best of my knowledge, whatever they told me, I'm informing you. Then here there are 2 issues. One is Sarda Mines or SMPL, they have 20 more customers other than JSPL. Now the conveyor is only for JSPL. So JSPL cannot share this conveyor with anybody. So they are clearing iron ore from their premises and selling to other 20 customers. And these 20 customers are picking up through trucks. And because there is no railway siding inside, so it is their compulsion that they have to use the trucks. So this is one, and that is going to benefit the entire steel industry and also the small producers because iron ore is in shortage and they were selling to all these 20 people and everybody was getting a good share and everybody was running their plant. Somehow that objection has been raised by Odisha government, but this SMPL is not meant for alone JSPL. I mean, their stand that you are allowed only transport goods through conveyor. I mean, that is, in my view, it is not correct because the conveyor is coming from SMPL premises to JSPL premises. And JSPL premises will not be in a position to share the quantity with anyone else. Number 3, we have more than 7 million ton of stock lying in SMPL premises.
Mr. Sarda, we'll let you go on that note. Thank you for taking time out and joining in, giving us a view, Mr. Sharma, as to what has been the outlook on JSPL.